I was about to do a story. Hopefully we are live. Good morning, everyone. It is Tuesday, April 9th. I have some very special guests with me. We have Chris, who, hold on, time out. I apologize. Let me pause I have YouTube playing in the background so I can see me, looking at you, looking at me. So, again, we have Chris, who runs the Discord. The camera's kind of like being weird. There we go. Nice, handsome man. He is also a trader. He runs the Discord inside and out, does everything, this is the guy who handles the messages, all that good stuff. I'll give him an opportunity to talk if he'd like to. This is my man Noah. He is one of the head men of support for Surge, also a trader. He just, he took it off, but he just experienced a nice little injury 2 days ago surfing.
Right in the shoulder.
I don't know where, because Naples don't have any waves, so it's kind of hard for injury like that to happen, but it's all right. Noah's growing. But anyway, hope you all been having a wonderful week. Just want to say this before anything. I don't even have it pulled up on my phone, but before we share any charts, I don't know if anybody ever listens, but for the last year, 2 years, gold hit another all-time high, $23.55 an ounce. Monumental. That means things in the economy are about to start shifting. We have an all-time high of everything: credit card debt, loans, bankruptcies, foreclosures. The economy's supposedly at the all-time high, and then you have gold, which is the biggest safe haven of the world, at an all-time high. So prepare yourselves, especially as traders. I'm not saying going to be shorting anything, but I'm just saying something, and it probably will, I always say this, it'll probably be intertwined with the election. I can almost guarantee that. But you guys want to say anything? You guys want to talk?
No, just be prepared for a nice short coming.
Yeah. By the way, I did say this a little bit about trading. Chris has been dabbling with the EAs and algorithms for, I would say, maybe 9 months, maybe a little longer, probably a little bit longer, but what he's showed me, been doing very successful with that. I commend anybody who does anything with coding and algorithms. He's like, oh, it's easy, you just do this. To me, it's Chinese. So definitely cool. He showed me a lot of charts on that. It's could be a game changer, something that could be possibly implemented into Surge. I don't know if we could offer that to traders or not. Noah is a manual trader. Somebody just fell on top of the roof. I don't know what that was. But, oh my gosh, I got my headphones too. Hopefully, is the sound good? Because okay. But yeah, Noah's been manually trading for how long?
3 years.
Yeah, and Noah's 17, Chris is 24. So I wish I even knew about trading at that. I'm 39, so I didn't know anything about it. Wish I did. I would be probably a billionaire right now. Might be. I don't know.
Stay tuned.
Yeah, stay tuned. Coming. But yeah, I won't waste a lot of y'all's time. I'm going to try to keep this short and sweet because last week we kind of ran a little bit longer than normal. If you're on here, we appreciate you. I love you. If you don't have time to watch these, I know I do them at 11 o'clock. So it is hard to join. If you're watching this back on the YouTube, leave a comment because you guys don't do a lot of feedback for me. But yeah, I will jump right in the charts real quick. And we want a giveaway. See, I want to do giveaways too. Trust me. I want to do giveaways too. We've kind of been waiting on everything, like the whole, I'm just going to use the word merger, but it's really like transition. I've been just waiting on the waves to calm down with that a little bit, make sure everybody's got their accounts, everybody's trading smoothly. Obviously when things like this happen, we completely change the whole back-end technology for Surge Trader. So it's to be expected. There's going to be a little bumps in the road, but looking for the light at the end of the tunnel. We're trying to just make sure everybody's good, everybody's got the credentials. I haven't even been able to start trading yet. So once that is in play, I promise you guys we'll start doing giveaways. I want to do some account giveaways. I want to do some setups like new laptops and desk stuff, whatever that. I'll put a little poll on my Instagram, Imperial FX Academy, on what you guys would like to see as a giveaway. Maybe, I can think of 50 different things, even like these. Like, I don't think of this as a really big giveaway, but a lot of people love these, so it would be cool. It doesn't always have to be intertwined with trading. Giveaway in the live, yes, I agree 100%. And that'll get the engagement up. Hey, that's fine. fine with me. I don't care if there's 2 people in here. That's just better chances for y'all. But anyways, real quick, not to waste a lot of time, I'm going to jump right in the charts. Well, let's do this. Hey, no, you know what, guys? Before I do this, can you, Wormy, give me a thumbs up if you guys can. Chris, just tell us how long you've been working for Surge and what do you do here. That way, let's see if they can hear it.
I've been working for Surge for about a year and a half, almost 2 years now. I'm the community manager and I run the district.
I know there's a little delay, so can you guys hear them good? Because if you can, I'd like for them both to just give a little. You can? Everything sounds good? Okay. So, Chris, tell us what got you into wanting to trade with the algorithms.
Just like my lifestyle.
I'm just putting my hand back here so it'll kind of focus on you. There we go.
Just like my lifestyle, manual trading was taking up a lot of time, so I just wanted something that be more automatic.
100% agree. That's a big thing. That's why before I came to Surge, I did a lot of algo trading, and I also love manually trading. It's just who I am. It's a part of me. It's in my blood. But 100% agree. Like, if you can find or create a system that works with the algorithms or EAs, and you take that human emotion out of it, it's game changer. You said you were trading for how long?
I think like 4 years.
4 years. See, so he started basically when he was 20 years old. I didn't even know trading existed. I knew stocks and all that stuff, but Forex, never. Noah, what about you, big man?
So it's been about 3 years for me. I started trading because I hated working. I hated going to school. So there had to be a better way. Then my friend Cameron, you also know him, he's also head of support. He told me about it. He got me interested, and I fell in love with it ever since, you know?
Super addictive, I would say.
Way too addictive.
Yeah, like everyone, we were raised on don't do this, don't do that. Trading should have been in there somewhere, like don't do it, because you experience 50 million different emotions. You go through the highs and lows of winning money, losing money. It's just like gambling, going to the casino, but not because we take calculated risk and stuff like that. But once you
gambling
yeah,
quickly.
exactly. And once you experience, like if you have your first win, you are hooked completely. And then you have your first loss and you hate the world, you hate everything, you never train again, then you get back in it. So it's always this love-hate relationship until you have the trading plan, consistency,
discipline, all of that.
Bingo. So this is why I scream at you guys every live on my Instagram. I can just scroll through 1,000 messages right now. I almost copy and paste because you guys are going through the same thing. The first thing I always say is, let me see your trades. I see 1 lot, 5 lot, 6 lot, 12 lot, 9 lot, inconsistency in your lot sizes. What were you doing for getting that trade? I don't know. I just, boom, no trading plan, no consistency, and no discipline. You are setting yourself up to fail. So that's why I say that every single time. All right. So again, let's check out forexfactory.com to see what is going on in the world. And boom, let me refresh
We got
this.
a lot of news this week.
Yeah.
It's going to be crazy.
And you guys know I do filter out my Forex Factory. Again, there's no affiliation. I love Forex Factory because it's super clean, super precise. You can just click this little flag right here and filter through what you want to view. I'm just going to be honest because I'm very lazy. I just look at colors, orange and red. I know that if it's orange or red, the news is going to be super high. Now, over the years, I have experience where CPI, FOMC, NFP, stuff like that, I do look for that, but this other stuff, like if I'm trading the CAD and the BOC monetary policy report, this might be extremely important, but I'm lazy. I'm a trader. I stress myself enough looking at the charts. But if you want to get into the detail, literally this folder right here, you open the detail, boom, you can see why it's important to traders, what it is and what it's doing and what it possibly could do for. Usual effect, more hawkish than expected, is good for the currency, meaning if this news comes out and it's bad, that's going to be great for the currency. And that's it. Literally, you can just click there. I normally only trade USD pairs. I do if I don't see if there's just all kinds of anomalies in UJ or gold and stuff like that, I'll look for a slower pair like GBP USD, something that just creates beautiful market structure, doesn't have crazy 100 pip whipsaws and stuff like that. But for the news, Today, NZD, I don't even trade. My favorite pair besides gold was GBP NZD because it would move 250 pips per day or per session. Very good pair to not learn how to scalp, but when you start scalping, that's a very scalable pair, GBP NZD. News at 10, never mind, I'm sorry. Tuesday, April 9th. Okay, so this news already out, but this hasn't updated. For tomorrow, we have a pretty good bit of news for the U.S. dollar. We have CPI. Y'all know that is very important for the U.S. dollar. Thursday, we have some unemployment claims, PPI, core PPI again. And then I wish I could, I believe you can, but I'm not going to do it on this live. You can go back and see how the news played out. Remember last week, Tuesday and Thursday, Powell spoke, and gold shot through the absolute roof, 23.55 again, and climbing. And we're about to go into the charts. I just want to say it's always a good thing I'm not a fundamental trader at all. At all. I don't care. I normally would say the fundamentals would always play a role in my technicals. It might give a little bit of pullbacks, but that's to be expected when trading. But 9 times out of 10, if I was trading a pair and I was in the green with it, in the blue, in the profits, the fundamentals would give me that push, or it might put me back to entry, but I wasn't too worried about it. Now things are a little bit more chaotic with the economy, and news is pushing a lot more with the dollar. So I would advise that it's definitely good to at least just flashback, look at it, check it out, say, hey, you know what? I'm trading at 10 p.m. or my lunch break's at 10 a.m. I'm probably going to be trading at 10 a.m. There's going to be this press conference or this, that, and other. So just always keep in mind, just take a look. It takes 5 seconds. I'm just trying to help you guys be a better trader. So there's that. Let me stop stop sharing. And then we will go into the charts real quick. I won't take a lot of y'all's time. Now again, remember, look how this played out. I said we're kind of in this little wonky session right here where gold is just bing, bing, bing. I said that gold can do one of two things. It's going to come back, do a little pullback to these levels, and then take off. Gold literally came down, dropped from, I'm sorry. This is USD JPY. Y'all tell me to shut up. It works that easy. All right, 4 hour. I could have went over UJ, but still, let me scale this down a little bit. Gold, just look at this. And this is why, again, I trade only areas of, I only trade off pairs of support and resistance, or the levels, the key levels, whatever you guys want to call them. I'm going to go in about 3 minutes and show you how I identify these levels, but it's literally, this is why over, I would say, almost 9 years of me trading, the consistency that I have found trading only off these levels does everything. It does the justice for me on my trading, because what I cannot control, whether I'm in a bullish or bearish market, how the pair goes, any pair, whatever it is, all it does is ping pong, up and down, up and down, up and down. There's no smooth line. Trading doesn't look like this. I'm gonna change it to the line chart. It doesn't look like that. Even with the line chart, you can see it's just ping ponging back and forth, scribble scrabble. So that's the things you can't control. Like a lot of you guys, you get into a trade and you're going into it thinking that you're not going to have drawdown. Drawdown is inevitable. It happens with every single pair, every single day. All price is doing is going up and down. And then what you want to do is catch the momentum of the flow. So if price is bullish, you want to catch that bull momentum. If it's bearish, same thing. Don't focus. If your entry is like right here and you're buying and then price comes down, 15 pips, and you panic and close, then you open a sell position and the price goes against you, and then you panic close, then you do a buy and it does the same thing. Like, that's why I always say 40 pips gives the price enough room to breathe, flow, do pullback, whatever it wants to do. I'm already in a position that it's not going to hurt me one bit. I don't care if it's a loss or not, because I'm only risking like 0.4% or 0.04%. Like, if you're on a surge account at 100K and you're trading 10 lots, you absolutely deserve to blow it. Like, what are you doing? You're trying to make a 10. I watched you guys. I don't even comment anymore because you guys eat my lunch on Discord, but you're just trying too hard. You're going for 10K days that you might hit one, you might hit two, and you get that nice little payout and you're like, all right, I can do this consistently. There is nobody that does that consistently. Like you have to scale it down and not risk so much. You want 10K over 5 months or 10K in one day and lose it the next. What would be better? I'd much rather the long run. That's why I'm trading. I didn't trade to be a millionaire today and then lose it all tomorrow. I want to have a success rate that carries me for the next 20 years and no stress. Like trading higher lots, one, is so much more stressful because immediately you go into drawdown. Immediately, if you're in drawdown, 10 or 15 pips is like 28 to 4,200 instead of $42. Hurts a lot. That causes me panic. That's why everybody's like, oh, even I watched you deposit, you made the video of the deposit and this and why were you trading 0.5 lots? Because you guys see these Instagrammers dropping 900 lots. There is not a broker in the United States that will allow that unless you've got like 15 million in equity. So you're all automatically judging me based off somebody who's lying and showing you demo accounts. So remember that. I'm trading realistically. I'm not trying to show you that I can make 500 grand in one day and go rent a Lamborghini. That's not how it works. Enough of that rant. But anyway, on the levels, all right, real quick. So I won't spend, I'm going to just do from the top down. Let me see, do a live edition account giveaway. This would really be a great help for the community and for low income traders like me. Absolutely. Like I said, just let the transition settle down where everybody's trading, everybody's got their credentials, everything's working flawless with MatchTrader. Oh my, see what y'all did? See what y'all did? Y'all made my guys leave. That's what happens. I'm just playing. I'm just kidding. But yeah, once everything goes through, I will talk to the team, see if we can start getting some live or some account giveaways, doing some type of, I love giveaways. I know that creates the most engagement, and it's basically like giving back to the community, so I agree 100%. All right, 5 minutes, and then I will be out of here. I won't take no more of y'all's time. So what I do every single pair, if you go back and watch every single live, you'll see the consistency on how I do this. I go to the monthly. Let me remove these drawings. I go to the monthly. I switch from candlesticks to line chart, and I'm about 100% sure on MatchTrader you can do this. It's almost identical to TradingView. So, line chart monthly, based only off current price action. I don't want 70,000 lines on my chart. I don't want to have pure chaos when I'm trying to decide how price is going to move. So, peaks and valleys. You'll hear me say that a million times. I don't use indicators. I don't use moving averages. I don't use Fibonacci's. I use support and resistance areas. That's it. So, we got a line. We're going to put right here, obviously based off current price action at 23.48, or let's say 23.56, I believe. That's the peak. We'll do a little valley down here where price blew out, and then we'll do another one right in the middle just to keep it parallel with each other and make it look nice and aesthetic. That's it. That's for the monthly. I can right click, I can change the color, I can change and put a text to where this is my monthly zones. That's up to you. If you want to do that, that's great. The lifeguard indicator is an indicator that if you're lost and your friends aren't helping you out, normally your friends are supposed to come and take you away. So the lifeguard indicator is something I would highly suggest you don't use, especially at late night sessions, because you're already tired. You don't know what's going on. Oh man, I hate you. All right. Monthly zones are identified. Let's go down to the weekly again, because I don't like too many, especially on the monthly. You're talking massive amounts of change with that. So going down to the weekly, you can move. You remember I put that line right there just to kind of give a little bit of parallel, and it just kind of balances it out. What I see here, price realistically broke out of that range for let's say all the way back to 2020. So obviously I'm going to put some lines down here, but again, I just want to keep things nice and aesthetic and clean, so it's okay. All right, daily. Yeah, the Baywatch indicator is not a good indicator at all. All right. Gold's kind of hard right now because gold was ranging. It'd be better if I wouldn't have done it based off current price action, but this is perfect. This is perfect because this is what to do when we don't have any structure right now. Gold's just going through the roof. So I'm going to show you how to create that with this. So we have gold where obviously gold hit this area, 2032, 2032, 2032, boom, 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 boom. It hit this level like 10 times. This could be a key element area, and I'll just put this right here. Like whatever price is right here, when gold is in that area, there could be some things behind closed doors that we don't know about with the economy, with the government, that once gold transitions past this point, this means that interest rates go higher. This means that prices of consumer goods go higher, stuff like that. So I know that's how gold works based off its price. Like each level has a, I don't know the word, but it's like, it's an element that pertains to different things in the economy. Like you see, again, the interest rates and stuff like that, prices of home, like that's how gold plays out because again, it is the biggest safe haven asset of the world. So we have this key level here of 23.34. We can say 20.35. That's fine. And then we have where gold is peaking right now, which could continue. It could just blast, just be a monumental. It could go to 2,600. We don't know. I chose 23.50, and me and Corey were talking before this live, because you can scale basically where price was ranging back and forth for the last 4 years, and you measure from here to that point and then from there to that point. So realistically, if we go based off what I just said, gold was at 1170 and then its peak at 2060. You measure that and then you come out where gold was like the breakout area, and gold is matching at 2800. That's not a realistic strategy. It's just what I've seen over the years. I've seen it happen multiple times. When prices ranging for months and months and months, you can measure out the move that it took to get there, and it's almost like an inverted head and shoulders. You know how you can measure from the head to the right shoulder. That's the move that it's going to happen out of the breakout. That's like a 99% win rate when you see that structure on an inverted or head and shoulders. You measure from the head to the right shoulder and where current price action is, and that's the amount that it's going to go. That might not make a lot of sense. Next live, I'll kind of dive in that if you guys want me to. But yeah, so I definitely, just measuring this with my fingers, I'm going to say gold's definitely 2,700. That's measuring from this low to this high, and then here's our range. Here's where gold broke out. This was the move. So from there to there is the same distance from here to here. It's just how price moves. I can't, it might be the algorithms that the government uses or whoever of how price plays out, but we'll see. I know it worked perfectly for 23.50, like to the pip. And I'm going to go back into my lives and go back and find my stories where I said this, just to kind of boost my ego a little bit. But so again, we have these areas. Now you'll see once I get down to a lower time frame, we can scale this out a little bit. But because we don't have any structure right now, price is just blasting through the roof, I'm just going to put some where I guesstimate that's about the center of that, and then probably maybe here. All right, that's on the daily. We go to the 4 hours, see if we, boom. Now look at there. I didn't see anything there. You guys just seen, I just guesstimated where I put that line, and watch, you see how it plays out. Now I'll say the only difference, if you're like, I don't know where to put lines, it just comes with consistency in me doing this. I've taught this, I've showed this, I've done probably 40 lives, however many, doing the same exact thing. It's consistency on what you do. I trade just like this. Price is a ladder, literally, up and down. So finding and identifying these levels, it just helps you ride the momentum. I'm a swing trader, so I want to trade from this low to this high. I want to take 40 pip stops to a 300 pip reward. And in between that, on these pullbacks, scale in. And I didn't even speak on that, but scaling in is where you change. That's where you take that huge shift in your trading. So when you're in a winning pair or in a winning trade and you have your first pullback and you're, let's just say for simple math, a one lot. My original position is a one lot. Price goes up 140 pips. I'm doing beautiful. I don't scale in on that first run. I always wait for the first pullback to come back. because it could go all the way to entry, and then I will add another entry. But price could come back, do a little pullback. It might be 60, 70 pips. 90% of you guys would have closed automatically. But first entry's here, pullback of 50 pips, boom, a 0.5 lot, half of my original position. Meaning, if this pullback does go to entry, that amount of drawdown does not wipe out my profits, and it gives me enough time to where I can decide, all right, I'm done with this trade, I can close this, I can still get maybe $20 worth of profits, close out, pay the fees, and I'm still good. If I went a one lot, and what I see a lot of you guys do, your original position's a one lot, and you're scaling in, your second position's higher than your first, which means once price pulls back, you're in more drawdown, you're eating up your profits. Now you're panicking, now the emotion's in, and boom, and then you close out, and the trade goes exactly how you knew it was going to do. You just created too much catastrophe to where you couldn't hold it emotionally. Stop doing that. Have your trading plan. Have your risk management in play. It's that simple. Like, you guys know, every time I talk to you, you're like, I already know what I did wrong. I know what you're going to say. Well, it's up to you. I don't care whether you blow accounts or not. It doesn't matter to me. It doesn't affect me one bit. So if you're coming to me looking for help, and I tell you, take some advice, at least try it. Debate me whether or not it worked or not. But I guarantee you it will work. You just got to stop allowing yourself to get greedy, throwing crazy lot sizes and doing all the nastiness of trading. All right. We've been almost 30 minutes, so real quick. We are in the 4 hour. Now I can put some more lines. I'm going to put them just at, and you can right click and clone this, and it'll literally, excuse me, measure out the exact distance, and then you just boom, 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 just keep cloning it back and forth. But we don't want a lot of lines, so I'm just going to put this center, center, and center. Now we have a little story of how price is moving. We can see if we're going to short, how price will go here, if we're going to go high. I mean, if we're going to go in buys, we can see where to play out there. Excuse me, talking a lot. Kombucha, by the way, Peach Paradise, absolutely phenomenal. So let's go down to the 1 hour. Obviously, the lower the time frame, the more chapters it tells, or the more it tells about each chapter of price. That's how I like to say it. I do trade. You guys sent me a message the other day. Yeah, I see people typing, but it's not showing me. Let me see this. Yeah, I don't know why it's not showing me. But 15 minute, 5 minute, I don't even bother with 1 minute time frames anymore. 5 to 15 minute, that is good. Like if you're trying to just be that guy or that lady, and you're just trying to be perfect with your entries, 5 to 15 minutes, but you're wasting your time. Like if you a perfect entries don't exist. Like the fact that you even say a perfect entry tells me automatically that you don't have your risk management in play and all that stuff, because you're looking too far for something that doesn't exist. Drawdown is something that is with it, you're going to experience it. Like you cannot try to take out your drawdown of trading. You have drawdown just for the fees of taking a trade automatically. So remember that. Stop trying to be so a perfectionist and start trying to just be profitable. Super simple. Change your mindset a little bit on that. So 5 and 15 minutes, they do tell a little bit. You can see how price plays out. You can see what I like to use. This is why I have the 15 minute on here, because 15 minute is great for identifying market structure based off a shift of that area. So if we're looking for shorts here, 15 minutes will show you where price broke through this level, came back, retested, couldn't be consistent with it. Excuse me, broke back down, and then you'll see like nice candlestick structure of like a double top, inverted head and shoulders, whatever you guys like to call the structures. I just look for where I see prices broke through, couldn't identify this area that once was resistance, now support. It couldn't find a good foundation on it, breaks through, and now that area of resistance is once again in play, and we're shorting. That's what I use the smaller time frames for. But let me show you the beautiful magic of why I do line charts, looking for peaks and valleys. Going from the line chart to the candles, and boom. Just look how clean and precise. And this line right here that I put, I just guessed. I guesstimated on where it looked at, what looked like the middle of those two areas of support and resistance areas, what I like to call the heart line. And look how it plays out. I'm not going to say this because I used to say this. Trading is easy, but what I have experienced with a lot of you guys and a lot of people that message me is you overcomplicate things so much. Like, just watching price is stressful enough and boring. Like, sitting here just watching price, yes, it's not boring. I mean, it's boring. So stop putting so much into a story that doesn't exist and just let price show you what it's doing. Like, set your levels, set your targets, and then trade it. That's it. Put your stops to where if you're wrong, you move on to the next trade, and that's it. Don't overcomplicate things so much. And you see, like, when you go to the line chart, like I see this double top here on gold, literally gold is doing what I was explaining to you guys. Gold broke through this nice bullish candle, boom, blast through, comes up, failed to retest this area as a support, blast right back through, cancels out this bullish candlestick. Buyers come back in, maybe to trap the sellers, hits everybody, stops, comes right back down. This bullish candle stops literally at that level, and then the bears take over. This little, remember my beautiful strategy of break, hook, and go. That's it right there. Same with this. This was a break, hook, and go right there. It works both ways, buying and selling. So potentially we could be shorting gold. I'm not trading right now, so I'm not going to say what I am or not going to do. But what I would be looking for if I was trading, I look for gold retest this area, fail to identify this as an area of newfound support. Resistance is holding strong. Price is going to fizzle out a little bit, maybe to 23.16, and then we're going to be looking for massive bulls to be coming in and just rage on gold. That is my the foreseeable future for me on gold. But again, so we'll come back Thursday. We'll check this out. What I'd like to see is this beauty right here, 40 pip stop, 24, let's say 24, 23.50 point. And that would be my trade. Like, what did that take? That took 3 seconds, literally. I didn't look for I didn't wait for the eclipse to bring out the mystical spirit of me and say that the stars are lining up and this is no. Like, you guys go so crazy. That's it. Like, I seen where price played out. This would have been a beautiful entry. Price could come back up, retest this area, and then go down, hit a stop. Oh no, I lost a trade. Happens all the time. And that's it. And then we look for longs off this level right here. 27, I think it was 27.60, what I said. I don't even see what price is here, so I'm just going to put that. That's where I'd like to see gold. I would say that's probably going to take maybe two months, but the way gold's climbing could be completely different. Love you, bye. Might have another special guest next week or Thursday to bring in a good friend of mine that completely different system of trading than me. Just to give you guys a little bit of shift. You know, I know I'm handsome. I know you guys love seeing me, but it can get old. It can be a little bit boring watching me because this is all I know. I can only teach you one way of how I trade. So it might not be the best of coming back and watching this and all that, but it works. So. But again, I hope you guys, it's April 9th, I hope y'all have a beautiful Tuesday. I hope y'all have a wonderful week. If you are trading, just be careful. We looked at the news, keep things in play. We'll watch gold. I love y'all. I hope y'all have a wonderful week. I'll say that a million times. If you need any help, message. You got Noah, you got Chris, you got all the support team. If you need help from me on Instagram, Imperial FX Academy, whatever you need, we're here for. I love y'all. I'm out.
Yep, one of those